Yeah,
that they
my
got to
view
stop.
is when you come to what we're breaking the economy. Now, we'll do it by the bond market and the currency market. And so my view has been for the entire year that they will finish their rate hikes around now. Now, whether they go again, maybe, but if this bond market continues like this, the Fed, the New York Fed desk is going to be calling them up saying, we've got no bond market. We can't continue. We're going to have to start changing policies. It'll probably happen at the margin first. As I said, it'll happen with the reserve requirements. It'll happen with swap lines. But that's the start of, oh shit, we've gone too far. And I'm sure if we continue another couple of weeks of this, oh, the whole narrative is about to change.
Hello and welcome to Money Talks. In today's video, Raoul Pal shares his macro outlook on the performance of cryptocurrencies amidst the latest rate hike by the Fed Chairman Jerome Powell. Raoul Pal also updates about his most recent crypto allocations and how expectations are influencing Bitcoin and Ethereum following latest Fed rate increase.
There's a lot of people who think that the whole trend is reversed forever and rates are going to be higher. I don't believe that, but I understand the point of view. So I'm not saying they're idiots or anything. Everybody is trying to figure this out. It's been extraordinary times. I think this has just been a bullwhip from the pandemic, and things settle down. We go back to below trend growth and falling inflation. That's the most unpopular view in the world right now. Doesn't really matter because that's a battle for 18 months' time. The next 18 months are slowing economies and falling prices. And opportunity because a pivot has to come. And the pivot doesn't have to be a massive cutting of rates of quantitative easing. It just needs stopping of the rate of change of liquidity tightening.
That's really important.
A pivot looks like, to me, not tightening the balance sheet, so no QT. Rate of change goes to zero. So you've got a beach ball underwater, particularly with something like crypto or technology, which has adoption models. So over time, they always grow. I mean, things like AI, just relentless. They're not going to stop. EV, not going to stop. Space, not going to stop. All of this stuff. So the rate of change of liquidity is like a beach ball holding it underwater. So the moment you just take your hands off, it bounces straight through. Now, quantitative easing is the wind that will lift it out of the water further. So a change of we're not going to tighten any further and we're not going to do any QT is going to bring ridiculous relief to markets because markets hate uncertainty.
The crypto market responded quickly and predictably to the latest Fed rate increase Wednesday afternoon. Both Bitcoin and Ethereum's prices dipped immediately following the Fed's announcement that it will increase interest rates by another 75 basis points. The crypto market was already in the midst of a rough week. On Monday, both tokens had fallen more than 10% over the last week.
And your time horizon is longer, right? When you're talking about
yes, the time horizon's longer. I was actually talking to somebody today about what would I do in the short-term time horizon. I actually don't know. It's pretty hard. I might sell some oil, but it's really volatile and scary. I'd probably sell some more currency for a bit, versus the dollar, because I think the dollar goes higher. But, those are matters of 2-week trades. I would be really nervous to be in any way in most of these kind of trades for longer than 2 or 3 weeks, because I feel like we're getting very close to the tipping point if this continues.
Crypto has been closely trailing macroeconomic events, and over the last year, the market has consistently reacted negatively to rate hikes. In a matter of minutes on Wednesday, Bitcoin's price dropped from roughly $19,500 to $18,900. Ethereum saw a more modest price drop, falling more than $50. Both drops signify a more than 3% drop after the Fed made its announcement.
I don't want to give price predictions. I'm just very bullish.
Recent volatility notwithstanding, price drops following the Fed's rate increase were relatively small compared to drops in recent months. So, what gives? It has to do with the market's expectations, according to experts. Everything is relative to expectation, not exactly what happens, but what happens relative to expectations. Short of some wild price swings in the immediate aftermath, things have played out as expected.
The Fed have not yet realized, and nor have most market participants, that real rates have to be negative forever. And that's the only way of getting rid of the debt. That is financial repression 101. And it's not just being driven by the Fed, the markets are doing that because of the rate of return. So if real rates are negative, which was the 1940s and 50s too, because they had massive debts after the war, the outcome is actually higher asset prices. And I know people can't stand that, but that's what it is. Negative real rates, which nobody likes, but that's how you get rid of the debt, leads to higher asset prices over time anyway.
Experts anticipated that the Fed would raise rates by 75 basis points. Because those predictions came true, the crypto market didn't see extreme volatility in its prices today, at least nothing out of the ordinary. This is in contrast to July, when the Fed announced its first 75 basis point hike, which was significant.
Yeah, remains yet to be seen whether it's the Italian government bond market. It probably feels like it's a developed market thing because kind of nobody cares if Sri Lanka goes bust or Pakistan and all of this stuff. I know that I don't mean to sound bad. It probably happens abroad. It probably happens in Europe. But who knows? Who knows? It might be just Jamie Dimon calling up the Federal Reserve saying, "Do you understand what you've done?" Or it might be the politicians saying, "What do you mean mortgage rates are at 7% and they've come from 1%?" I mean, these things are ludicrous.
Economic news regarding inflation has been particularly important for the crypto market, since that's what's driving the Fed to hike rates in the US. As such, crypto has been reacting negatively to inflation reports as of late. For example, crypto prices fell after the US Bureau of Labor Statistics released August inflation data, with Bitcoin prices dropping 4% and Ethereum 7% over the following 24 hours at that time.
Yeah, but I mean, don't forget the equity markets. I'm looking at the Nasdaq's down 30% already. I mean, what more do people want here? Yes, they want 50% because they want blood. Will they get 50%? I doubt it. If we go back to the Volcker era that everyone so loves, is the market was down 27%. If we go back to the 1940s, post World War II, the market was down 22%. 1990, nice big regular recession. ISM went down to 30. Where did the stock market go? Down 20%. Everyone's convinced, talking themselves into being more and more and more and more bearish. There's a probability, and it's probably, for me, it's probably 30%, 30 or 40% that it makes significant lows, but I think it's 60% more likely that we don't make significant new lows. But let's wait and see. These are, the bond market keeps breaking and we're at 4.5% yields in 3 weeks' time. Yeah, maybe we will. Look, the problems are everywhere. I mean, they're literally everywhere. And the Fed's going, la, 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 I can't hear you. I don't think it's really realized because they're still based on the narrative of we need to fight inflation until they realize they've broken the system. It's like the government's fought the narrative of we need to save the people in 2020. And before they know it, they realize they've broken the system because everything became illiquid and the Fed had to sort it out. There's somewhere within this something very similar going on here. And it's not Raoul just wants to see them come back with quantitative easing. I'm like, I think people don't understand the structure of markets with this much debt and the issues you've got. The Fed have never really acknowledged the debts, which is the big thing that they've caused. They've never acknowledged them. It's the elephant in the room. You can't talk about the 1970s and not talk about the massive doubling of debt that's happened since then. Again, Americans will never come up and say, they'll talk about the national debt. They'll never talk about the total debt. They'll never talk. Nobody really admits that the US is the most indebted country as a percentage of world GDP in all recorded history. No other country has been 100% of world GDP in debt. That's terrifying.
Just how low crypto prices can go this year, though, is still up for debate. Some experts contend that Bitcoin is still poised for a massive drop-off into the $10,000 area this year, with or without bad news from inflation and the Fed. Long doesn't think we'll see Bitcoin's price hit 4 digits again, but dips to around $13,000 may not be out of the question. So, do you think that the Fed Chairman Jerome Powell just broke the market with new rate hikes? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.